And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. Great to have you join us. Let's take a look at what's happening in the news. We see global oil markets rose today, recovering from early losses and hopes that planned easing of restrictions in Shanghai could improve fuel demand, while lingering concerns over tight global supplies outweighed fears of slower economic growth. Brent crude futures for July were up $1.53 to $110.64 a barrel, after falling by more than $1 earlier in the session. U.S. West Texas Intermediate crude for June also rose about 93 cents to $110.52 a barrel, recovering from an early loss of more than $2. WTI for July was up $1.57 at $108.50 a barrel. Both the benchmark prices fell about 2.5% yesterday. And the World Bank says it's set to release $30 billion over the next 15 months to help tackle the impact of global food price increases, which are having devastating effects on the poorest and most vulnerable countries. In a statement issued, the International Finance Institution says the total amount includes $18.7 billion for existing projects with direct links to food and nutrition security issues, which have been approved but not yet disbursed, and $12 billion for new projects. Meanwhile, World Bank President David Malpass asked countries to intensify efforts at increasing energy and fertilizer supply to help farmers improve yields and remove policies that block exports and imports or convert food to biofuel. And Seplat Energy Limited, one of Nigeria's leading indigenous energy companies, launched the Tree for Life initiative, which aims at reducing carbon dioxide from the atmosphere while protecting the environment. The Tree for Life initiative targets the planting of 1 million trees yearly over a period of 5 years. Chairman of Seplat Energy, Mr. Bryant Ojako, who was speaking at the launch in Abuja, explains that the plan is to check environmental degradation while promoting afforestation, which will further impact its business operations in Nigeria. Take a listen.
Thank you very much. Seplat Energy Limited, Nigeria's leading indigenous energy company, is presenting its latest intervention to the public, which targets the environment. This is coming after the acquisition of 8 oil and gas assets, expansion of the Oben and development of the Anor gas plants, and the dual listing of the company on both the Nigerian and London Stock Exchange.
The tree planting exercise has two folds. One is to put in check deforestation, protect our environment and our forests. 2, encourage reforestation. Reforestation from the point of view that everywhere you are, you must plant trees.
The Chief Executive Officer of the Seplat Energy Limited explains how the initiatives would work.
Our initial target is 5 million trees. That put simply is 1 million trees every year for 5 years. We're focusing on 5 states initially. Okay, so we're doing Edo State, Delta State, and Imo State. Why? Because we operate there. But we're also adding 2 northern states in as well.
Words of commendation pour in from industry players over Seplat's intervention to protect the environment, just as the federal government recommits to the net zero carbon emission by 2060.
I'm very happy that Seplat is leading this way, setting this pathway to achieving net zero in 2060. As a government, we are also creating corridors and pathways that operators in the industry can take to actually achieve net zero.
Done with the speeches, it's time to launch the initiative. Officials of Seplat Energy Limited, in company of the Minister of State for Petroleum Resources, plant a tree at the premises of Yadua Center, Abuja. 5 other states are expected to benefit from the initiative going forward.
We see transition from dirty fill still center of conversations right now globally. Well, now to our first conversation. We're looking at investment migration industry. It's now become an integral feature of the global economic landscape. It's a multi-billion-dollar industry with over 30 countries offering citizenship and residency by investment programs. Well, to discuss this, we have Teka Jibril, Regional Director, Citizenship and Residency, RIF Trust, joining us right here on the program. Great to have you. Good morning.
Thank you very much, Ladi, for having me.
Yeah, so quite an interesting one there, investment migration. You know, for those that don't understand this concept, can you break it down in layman terms?
Thank you for the question. Investment migration is an industry that was curated by countries who sought out a different way of generating FDI. Now, foreign direct investment, they get foreign direct investment, and by the way of that foreign direct investment or contributions from individuals around the world, they will grant either a residency or a citizenship to that person. It's pretty simple.
Pretty that straightforward. But, you know, what factors do people look out for before saying, okay, I want to use this particular country, I want to go into this country, invest, and get their residency?
It's different motivations for individuals. Individuals are very, very different around the world. But we, as a company, RIF Trust, we have summarized that in simple forms. Most clients of our clients are looking at security, mobility options. They're looking at better investment opportunities for themselves. They're either also looking at lifestyle opportunities for themselves and their families, or education and employment.
Right. So do you have to, because your clients have different motivations,
yes.
But which one would you say is more rampant when it comes to your clients? What is the major motivation?
The major motivation for our clients mostly is global access. They want to be able to have access to the world as fast as possible, you know, whilst at the same time avoiding all the bottlenecks that come with, unfortunately, holding a Nigerian or an African passport.
Right, so different motivations, yes. Different clients. But at the end of the day, you know, these are interesting times. You know, we're seeing the UK with new highs when it comes to inflation. We see the US globally, you know, with the war in Ukraine. Everywhere is quite hot, you know, right now. So I'm wondering, you know, what are people looking at, you know, at this point, you know, with investment migration? I mean,
a very, very strong motivator nowadays, especially in today's climate, is the security aspect, right? They're looking for options for themselves so that they're not stuck in one place at one time. Very, very good example is what you gave. The Ukraine situation happened. A lot of clients that our Russian office, for example, had been speaking to and delayed during that time found themselves in a bit of a pickle when you know, the entire crisis came about. But the ones who had previously had options for themselves and created options for themselves were able to find solutions quickly, you know, when the crisis came about. So, like I said, the motivations for our clients are very, very different. But all around the world, they seem to always revolve around security, mobility, investment, lifestyle, and education.
Right, but you're talking about global access, you know. Having more global access, what are the benefits, you know, of that for, say, for the individual and the economy?
For the economy of the source country, you know, you're looking at people going out there, seeking experiences and opportunities for themselves and their business.
Some will call it brain drain, though.
Well, yes, there is that misconception, but it's untrue. The reason is because brain drain, when we're talking about brain drain, we're talking about people emigrating out of the country en masse, right? These are highly skilled people who are going to emigrate out of the country and then benefit the economy, solely benefit the economy of a developed country. right? With the citizenship by investment programs, they are tailored towards people who have businesses in country, right? They have their families in country, they have businesses in country. They are not looking to leave, right? What they're looking for is global access, right? They want to have the same access as their counterparts in the West, right? They get those global access, they come back to the country and create jobs, create infrastructure. Matter of fact, a lot of our, a growing trend is in the tech space, right? You're seeing African startups, for example, last year, African startups generated $1 million every 2 hours. And, you know, having global access gives these companies and these individuals opportunities to do things like this. Go there, seek funding, come back to Nigeria, create jobs, create opportunities for other Nigerians, and also add to the GDP of the country.
But investing, you know, means you're taking, you know, funds out of here, out there to, you know, be able to get, you know, some of these perks of residency. And at the same time, some would say that is, you know, taking money out. You know, we're taking precious, you know, dollars that we actually need here. We're taking it out there and investing in other countries.
Yes, you are absolutely right when it comes to that. Taking money out of the country, but you have to also see the symbiotic relationship that these programs benefits the country in hindsight, right? You're not just taking money out of the country. You might be benefiting another country in terms of funds, but you are also going to be benefiting your country in terms of the resources that you're going to be bringing back. You're looking at, you know, job opportunities for other Nigerians, like I said earlier. You're looking at human resources that you could bring back into the country. You're looking at experiences, the ideas that you could curate outside of the country and bring back into Nigeria they're not quantifiable, right? Those are the things that you look at. You know, you're not just losing money. You're gaining experience and bringing it back to Nigeria.
All right. So looking at this investment migration now, is there any direct relationship between this and foreign remittances or diaspora remittances coming into?
Yes, I mean, there's always going to be, especially when it comes to the residency by investment industry, you have people who reside outside of the country and would be definitely sending a lot of money back, you know, due to the benefits that they gain outside the country, sending money back into Nigeria, for example. So yeah, there is a very direct relationship between
So if we're seeing a rise, you know, with investment by migration, can we also see a direct rise in diaspora remittances coming back to Nigeria?
Absolutely.
Which is a plus for the economy. But what are the best citizenship and residency by investment programs, and what countries are actually open to this?
When we talk about best, it's completely relative. What's best for me might not be best for you, Ladi, and we see that across the board, right? So when we talk about, as a company, Rift Trust, we sit down and we're very advisory focused. So we sit down with our clients and find out what their motivations are. Like I said earlier, whether it's security, whether it's mobility, whether it's investment, lifestyle opportunities, or education for yourself and your dependents. We look at, you know, what motivates you, what is motivating you to seek something like this, and then we'll sit down and curate a couple of programs that might benefit you, and then you decide for yourself.
Quite interesting.
Yes. Also, when we also talk about the countries, you're looking at countries like St. Kitts and Nevis, Dominica, Grenada, Antigua and Barbuda, St. Lucia, on the citizenship by investment side. You're looking at Malta, which has a very revamped program now in Europe. You're looking at Turkey, also has a citizenship by investment program. Montenegro has a new citizenship by investment program. And then on the residency side, you're looking at countries like Portugal, Spain, Ireland, Greece, the US, Canada, which is, you know, hugely popular in Nigeria now. Yeah, those are the programs that are available.
Okay, but what about Nigeria now? Let's bring it home. How are we doing when it comes to that? Who's bringing the money here to invest?
You are looking at Nigerians themselves coming back to Nigeria and investing in Nigeria. You know, like we discussed earlier, the experiences, the opportunities that are gained outside the country are priceless. They come back to Nigeria, invest, build infrastructure, create job opportunities for other Nigerians.
But what about foreigners trying to also...
Foreigners, yes. You also see a lot of foreigners. For example, we're looking at a company like Andela, for example, that's sought funding outside of the country and did come back hiring foreigners and bringing them into the country. And that brought about also a lot of FDI into Nigeria due to the great idea that was, should I say, Andela itself. So yeah, you're looking at, like I said, in the tech space, it's a very, very brilliant case, right? If we're looking at the citizenship by investment programs, where tech companies go out there, seek funding, and bring that funding back into Nigeria, as well as bring, a form of foreign direct investment as well.
But what do you think can make, Nigeria more attractive, when it comes to these kind of programs? How can we, put ourselves out there, as that investment destination of choice?
Yes, I mean, there's a lot of things that Nigeria needs to do. We need to entirely revamp our entire tourism industry. We also need to create opportunities for foreigners to sustainably do business in Nigeria, make it a very, very sustainable place to do business. Not that it isn't, but we need to do a lot more better. And yeah, I think that's more of a question for the Nigerian government than for a citizenship by investment expert like myself.
Right.
I'm not a government official, but what
do you, from your perspective?
From my perspective,
when you see other countries, looking so attractive, what do you think we should be doing here?
We should. Nigeria has a lot of infrastructure and a lot of resources for it to be a very, very beautiful tourism destination. I think that should be our focus at the moment. We're seeing our neighbors, Ghana, investing hugely in tourism. We're seeing countries like Rwanda, Kenya investing hugely in tourism. That should be our focus at the moment. From there on, we move forward. I live in Dubai, for example, and that's where tourism was their #1 focus initially. And then they move forward and become the financial hub for the entire Middle East and Asia, right? That should be a country's focus, and from there we move on and make Nigeria a better place.
Yeah, make Nigeria a better place. Well, talking about costs now, I want to, use one of these programs, one of these investment migration programs. Do I have to have $1 million or more to chase this dream?
No. It's they're not relatively cheap. You're looking at the average contribution in the Caribbean for a citizenship program starts at $100,000 US. If you're looking to make an investment in country to qualify for citizenship, you need to invest around $200,000 US.
Well, that's a lot of money.
So not $1 million.
Well, 200 is still a lot of money. Looking at the conversion, that we saw yesterday and today. All right, thank you so much, Tech Jibril. This is one sector we will be tracking to watch its growth. The original director, Citizenship and Residency Risk Trust. It was great having you on Business
Thank you very much.
Thank you so much.
Wonderful.
All right, for the commodities market update, now we have Dumebi Oluwole, analyst, financial directors company, join us right here on the program. Great to see you again.
Thank you. Good morning.
Dumebi, morning. A lot has happened since the last time we saw, and it's UK inflation data. 9%, it's a 40-year high. It was expected, borderline double digit, and we're also seeing inflation trending up here in Nigeria. But how is this one impacting us, this UK inflation?
I think just like what's going on with the US as well, global inflation is really, a thing right now. With UK experiencing this, the US as well experiencing high rates of inflation, we definitely are going to see some level of monetary policy tightening in this area. First of all, with what's happening in the UK, we're going to definitely see an increase in the cost of living. We already know that energy prices are high, food prices are high, rent as well is high already in the UK. So if we look at how that would affect, number one, maybe like remittance inflows now. So UK is one of our major source of capital inflows and remittances. We have a lot of Nigerians that have family members abroad and all, but when their cost of living is high, they would rather want to spend, see how they can manage their income rather than send money down home. So that would have an impact on our level of remittance inflows into the country, and that would have a trickle-down effect into our level of forex, and then have an impact on how much forex the CBN has to keep the naira stable. Then another impact of this is when interest rates increase, because the Bank of England had already increased interest rates, and would most likely would see them do the same.
Be more aggressive this time? Or?
Most likely, yeah, just like what the U.S. Fed is doing. And the U.S. Fed is like for lack of better, like the almighty when it comes to global monetary policy activities. So when the U.S. Fed does something like what it has done already in terms of increasing interest rates, we most likely would see other global central banks adopt the same measure. Maybe not by the same degree or magnitude, but we'll most likely see them, go the same route. And we already saw the Bank of England increase interest rates, I think at the end of last year. And now that inflation has gotten to 9%, that's far above their target ceiling.
Double digits.
And they were expecting double digits. So they most likely would, embark on a pretty much aggressive monetary policy tightening, cycle just to curb inflationary pressures. And so what that means for Nigeria is when that happens, when interest rates increase, it just simply means that our debt level or our debt servicing costs are also going to increase. And that has a huge implication for Nigeria. Already debt servicing gulps more than 70% of our revenue. Our debt service to revenue ratio is almost 98%. So clearly we're using almost all that we make to service debts. Now look at a situation where interest rates are increasing. So it would definitely have some level of impact on and not only Nigeria, other emerging markets as well. The main thing that we're going to be looking at right now is, okay, what next? After this, what next? So clearly, Nigeria just has to brace for more impact, because so many economies, just like the UK and the US, would likely continue this monetary policy tightening stance. This could affect Nigeria's ability to raise more funds, raise more borrowing funds. And I know Nigeria plans to tap the Eurobond market again to raise about $925 million. So it's just a tricky situation for Nigeria at this time.
And we're seeing the markets, react to all of that. We've seen U.S. markets, hit new lows. The NASDAQ dropped a whole lot yesterday, about 4%. And, with all of this tightening, I wonder where we'll see some kind of relief, with these markets, because the more they tighten, the more we see, sell-offs in those markets. They've hit record lows at this point, and I'm wondering how low can they go at this point?
So first of we need to establish the fact that things like this happen normally. It's just one of those situations where both companies, investors, the entire economy, and even consumers, experience this global shocks, once in a while, but they are not far from, things that happen, regularly. We've seen this happen so many times, both with the crypto market, stock market, and we've seen this market resuscitate. We've seen this market come back. So I think what's making this a bit different is the kind of stocks that are tanking, and is where people are pulling out funds from, and the concerns or the fear of a global recession. I think that's what's making this particular situation a little bit different. And remember that we're just coming out from a global pandemic.
Right.
That's still not even completely dissipated. So there's a lot of uncertainty around where the global economy would be between now and the end of the year, or even next year, where stocks would be, where company valuations would be between now and the end of next year, where businesses would be between now and the end of the year. So because of that uncertainty, we're seeing investors very jittery. So let's look at the fact that what you said, the NASDAQ, the S&P Global. So what's happening there is that, number one, there's already, to establish the context, there's already a negative relationship between interest rates and equities market activities. So whenever interest rates are increased, we see reduced activities within those markets because investors pull out funds, or maybe the best way would be to rebalance their portfolio.
Risk off.
To include more stable securities, more government-backed securities than stock prices. Riskier assets. So that's exactly what we're seeing. But now, when we look at the kind of stocks that are being dropped off, and the other assets that are being dropped off, it clearly means that we're seeing that investors are pretty much reevaluating their decisions on stocks that they had to purchase or they have already purchased. So they're moving from growth stocks or companies that they normally would look at in the short term, to companies that are more stable. So even though the NASDAQ is probably tanking, you probably will still see maybe like a company that is into food production or something, probably still, even though their prices might not be as good as it used to be, but might not be as low as a tech stock.
Right.
Might not be as low as a tech stock. And then we're also not seeing, like, the cryptocurrency market we established last time on Tuesday.
Yeah, there's that
practically a bloodbath.
There's
exactly
between
the both of them. And that's because that's a more risky asset right now.
Oh yes.
So it's a very risky asset, and people just want where they can stabilize their money. And it's very typical when there are concerns of an economic downturn. Is very typical of when people expect a recession to happen. So it's just like when investors, or when the economy is anchoring inflation expectations, when they expect inflation to be high, you'd see a certain reaction happen. So it's just simply the same way.
Markets react, and we won't forget the dollar is also has hit new highs recently, but there is a slight pullback, and we know obviously once the dollar is strengthening, other markets,
once the prices become expensive.
Exactly, and now we're seeing the naira actually trade about 600 to the dollar.
Yes, one of the main reasons this is currently happening is we're able to attribute this to a significant increase in money supply, and this is all thanks to political campaigns that are already, underway. We're seeing exactly. I mean, we're seeing that for a presidential form, that's 100 million naira per candidate, and we've seen about 26 people come out to, state their claims or indicate interest in vying for the post of the presidency. And so, with this influx of money within the entire economy, considering the fact that already we were battling with an increase in money supply due to an increase in federal government, the CBN Ways and Means advances to the federal government. We're already seeing other aspects of inflationary pressures, from an increase in diesel price, an increase in food prices, an increase in transport costs. So all of this already, stoking inflation. And then now we're seeing a huge impact of an increase in money supply due to, an increase in political campaign spending. And the unfortunate thing, even though there is the positive aspect to it, to the fact that, okay, we can somewhat say that inflation in Nigeria now is following the global trend. So investors, businesses, consumers, analysts can say, okay, this is where inflation would likely be. So that helps to make some level of business decisions, because we're not far off from what is going on in the global economy. Where the big question mark on all of this now is that, unfortunately, the increase in money supply is most likely not going to end anytime soon, because we're just in Q2 and we're already seeing this much impact of an increase in political spending on money supply, and seeing how that is affecting inflationary pressure and Naira already. And then now we're entering Q3, Q4, where all of this is going to be more aggressive.
Quite interesting.
And remember that forex supply as well is not as buoyant as it used to be.
Yeah.
All production levels are still very low, and that's affecting our oil revenue. So the CBN has less forex to intervene in the forex market. And, the 600 that we're seeing is the parallel market rate. And once forex supply is low at the official window, we see an increase in forex demand towards the parallel market. So for people that are planning to travel for the summer holiday, even if I'm wondering where people are going to, but people will definitely want to travel. There's a squeeze everywhere. So I think you just rather sit down at home and enjoy Nigeria for some time.
Yeah, and just
so all of that. So people that want to get loans for school fees or payment for school fees, people that want to travel, businesses that need to import because things are now more expensive. So clearly there's an influx of demand at the parallel market, and that's another reason why we're seeing the Naira go that low.
With more demand coming there, we'll see that actually stock up more. But on a positive note, Nigeria's stock market has emerged Africa's best performer this year. Quite interesting when we're seeing other markets actually tank at this point.
Yeah.
Given again about year-to-date gain of over 20% at this point, and we're seeing the Nasdaq giving negative returns, and even the GSE in Johannesburg that gave about 1-point-something% or 2%. What's stoking this one? And it seems there's a pullback happening at this point.
Okay, I think the first thing we need to do is to situate what's happening in the Nigerian Stock Exchange and let's just with the Nasdaq or the S&P Global. So first of all, the companies listed on these stock exchanges are completely different. When we look at Nigerian Stock Exchange, first of all, there are not so much companies listed in Nigerian Stock Exchange. I mean, a Coca-Cola that's been running in Nigeria for how long is not listed in the Nigerian Stock Exchange. But regardless of that, we can't overrule the fact that there's a positive thing happening there. Maybe this is just a response to the fact that interest rates are still low. So that's a place where investors can still make some level of reasonable returns. Maybe that's one of the reasons why we're seeing this happen. And also remember that the companies that are, driving this increase in or driving this positive and very bullish performance, like Dangote Cement, Guinness, Seplat, we've seen positive things happen with their numbers over time. So it's very possible that people are just, trying to get a bite of those stocks, and that has, pushed the performance to where it is today compared to other African stock exchanges, other than what's happening with the Nasdaq, where we see a lot of tech stocks. Exactly. So that could be the reason why. But the truth is that I don't want to be the bearer of bad news, but I won't exactly say this is not a bubble, because it clearly looks like one, and it's something that would probably...
Nothing goes up forever.
Yes, it's probably something that would burst sometime soon.
Right.
Yeah.
We'll be watching out for that. Thank you so much, Dumebi Olowole, analyst at Financial Derivatives Company. It was great having you.
Thank you.
All right, we'll take a moment now. Welcome back. Now let's take a look at the markets. We have Ini standing by right there.
Thank you so much, Ladia. I wish I was able to catch maybe when she was saying all those bubble stuff.
Yeah, I know you don't want to see that.
Talking about our
bubble
market
burst.
that way, I'm not going to take that. Well, welcome to this corner. Let's tell you how the market traded yesterday. We're still doing that bearish run at the NGX. I mean, we've had a lot of high runs there, so let's balance the equation. I guess that's just what we're doing. Profit taking, sell-off is still being sustained in the market. The all-share index dropped yesterday 0.07%. It's not as much as it was the day before, which was 0.35%. So maybe we're coming back up. Equities is still within that 28 trillion naira, 28.422. I mean, they just interchanged figures. It just 442 the other day. Volume, value, everything was down yesterday. I mean, I think the value of volume went down about 50%. That was a volume, about 50% compared to the day before, showing a reduction in activities there. But of course, value is what tells us the strength of trading that took place. And then we see here that the sectors were mostly in the green, even though the market ended with a negative breath, but it was mostly in the green. Industrial goods was the only one that was in the red yesterday. Banking, we see, has recovered yesterday, and FBN Holding did a lot of magic yesterday, caught a lot of attention. We see it was the most traded stock by volume and by value, so most likely it drove that. So we have Abdul Rashid Mobo now to give us more insight into the trading and expectation for today. Good morning, Mr. Momo. Thank you so much for joining us.
Good morning. Can you hear me?
Yes, I can hear you. I can hear you. So it seems the good days are over for now, at least. So do we see it coming back? So I know you're very optimistic, you know, when we're doing that bullish rally.
No, it's simple. For every run, there'll always be a time to rest. So the bulls have tried so far. This year they've done so much compared when you compare what has happened in the Nigerian market compared to the world market. The NSE ASI has done so well this year. Even at this current level, I think the market has actually done well. I don't expect much rallies for now, because you know at times the market actually discounts everything it does. So basically, we might just see that this might be the whole rally we've been waiting for the whole year has just been done within this first quarter.
Wow.
You know, the last time. No, I'm not being negative. You know, I've always told people there are two players in the market: the traders and the investors. The traders are out now; they've taken profit. Now the investors are looking for the right price to actually get back into these stocks.
But Mr. Momo, how much of this can we connect to political activities? Because you can't seem to disassociate what's going on in the political scene, elections upcoming and all of that. You can't seem to, you know, disconnect it from economic activities.
Yeah, as it is now, there's so much cash flow in the system, if we like it or not. You know, by then we're going to actually see the true picture of the market, because I know some of the politicians in court actually might have equities in the stock market. They might want to offload by that period, and by then we'll have some people that will see have the cash to actually buy most of those stocks back. But note, someone was saying bubble. I heard you. I heard when the other
yes. One of our guests was talking about bubble.
The bubble we had last time, if you check out, then it was margin loans that actually caused the bubble. And when the banks came running for wanted their monies back, everybody they started selling at will. So as it is now, this is real money that's happening. These are not borrowed funds. So even if you buy now as an investor and you see that prices are going low, you might want to keep those shares. You are not under pressure to actually sell those shares, because this is your money in place. You work the market is trying to now is real money. It's not margin loans as we used to have the last time. So basically, I think this momentum will still be sustained, but as it is, for any bull run, there will always be a time to rest. For every bear run, there'll always be time to rest. So this is the resting phase now.
Okay, we just hope this resting period will not be for too long. You know, just long enough for some people to slip into the market.
You can see volume in some places like First Bank. Result is not out, but we are beginning to see some spikes of volume.
Yeah.
Yes, as we speak now, on the floor of the exchange, we have more offers than bid. But you might be surprised that is the next area, because if you look at it technically, anytime a price, a stock trends within a tight band for some time, there's likely going to be a breakout. And
all right.
I don't know what financial is going to look like, but I mean, from what I'm seeing,
yeah,
there is a trend between 11 to about 12 naira plus. So that's a trade range. I don't know where
all right, Mr. Abdul-Rashid Momo, thank you so much. I mean, trust me, this market also interests me, and we're looking closely. I know Ladi has been looking for a window to get on the ship, so perhaps this is the time. Abdul-Rashid Momo, as a trader with TRW Stockbrokers, thank you so much for your thoughts. Ladi, I don't think we can go into the other market.
Yes,
yeah, but I mean, Mr. Momo has just said it there. This might just be that break you've been looking for.
Yeah, and many of us who have not,
the bull is resting now. If you don't get on this ship, you might not have another opportunity.
Yeah, and I'll keep tracking that volume too. That volume is a good indicator, you know, to find, you know, what's interesting at this point. All right, Ini, thank you so much.
Thank you for having me.
All right, so after the break, we head to London. Do stay with us. This is Business Morning. Welcome back. Well, it seems every day brings a new grim economic milestone. Let's see what's happening in the UK. We have Juliana standing by right there. Great to have you, Juliana. Good morning. Well, the FTSE 100 and the pound both sank lower yesterday. I guess it's the inflation effect.
Good morning, Laddie. It is the inflation effect. I think investors are really starting to get worried now about the course of the UK economy. We know that the forecast is that we will hit a recession by the end of the year, but it could come even sooner than that. And I think this has really been outlined by the slew of economic data that's been released by the ONS. Most notably, of course, was yesterday's data showing that inflation jumped 2% month on month, but 9% year on year. So people are paying 9% more for their goods than they were paying this time last year. But again, it feels like it's much more than 9%, particularly if you are a low wage earner, or you're somebody that doesn't have a job. There has been immense amount of pressure put on the Chancellor over the past couple of weeks to do more. The first discussion was about a windfall tax, you know, putting a one-off levy on the big oil firms who have had eye-watering profits in the first 3 months of this year in Q1. So why don't some of those profits offset the amount of money that people are paying for their bills? Bills for energy went up 54%. They are projected to go up by at least another 25% in September. What is the Chancellor going to do? The windfall tax was voted down by Tory MPs earlier this week, but the Daily Telegraph are reporting this morning that perhaps the Wind for Homes, which is a scheme given to 3 million of the least privileged people in this society, about £150 off those bills every year. And now the suggestion is that the Chancellor could perhaps increase this by £300, £500, even up to £600 a year, which would cost the Treasury about £1 billion. But that doesn't appear to be enough. The Labour Party are trying to put a motion to discuss an emergency budget, which everybody on the opposite benches has been asking for. The government appear to have resisted thus far. There was a showdown yesterday between Sir Keir Starmer and Boris Johnson. He is not a fan, the Prime Minister, of putting a tax on these big oil firms, and he said that something is going to be done. But of course, when you're struggling to pay for your bills and struggling to put food on the table, you don't want something tomorrow, you want something yesterday.
Right, right. We see everything else going up, but wages, you know, at this point. And Britain's Royal Mail is planning more cost cuts after a profit miss. Well, it was a slight, though. What are you hearing about this?
Yeah, Royal Mail appear to be in trouble. They're one of the biggest fallers on the blue chip index today. Their shares slumped about 11% in early morning trading, and that's because they've disappointed investors with their annual update showing that operating profits came in at about £416 million, not too shy of what they projected, which was about £430 million. But I think it's their outlook that's worrying investors more. Royal Mail have had to try and change their strategy over the past couple of years because, of course, I don't know when was the last time you wrote a letter, Laddie, but most people don't write letters anymore. And that was, of course, for decades, their big money earner. But during the pandemic, things changed because lots of people were sending packages, shopping online, and they had a boom. They projected that this boom would last much longer than it has. But of course, with the lifting of restrictions, it appears as if people aren't sending online delivery packages as much as they were. So they've really lost out on that business. And yet again, they also had a big contract with the government where they were able to send COVID-19 tests in the post. Nobody really is testing as much as they were before, and that's taken off about 7% of their overall volume. So there are concerns. They have said in the trading update this morning that they will be doing their best to try and create some sort of cost-cutting initiative. This means that they will be sacking lots of middle management jobs. They don't want people to do the job that they think others can do. So lots of people will be losing their jobs. And also as well, they said that they'll be trying to streamline some of their service delivery to make sure that they can compete with some of the other big guys like Amazon, which is going to be really difficult for them. And that's why they're one of the biggest fallers on the FTSE today.
Quite interesting. We'll talk about moving with the times. Thank you so much, Juliana. We'll see you again at 1:30.
See you then.
All right, now let's take a look at other markets. We see Bitcoin failed to clear the 30,500 resistance zone and started a fresh decrease now. And we're seeing the market cap sitting at $1.24 trillion. That's down about 3.37%. We see volume traded $82.32 billion, about 7% this morning. And Bitcoin dominance sitting at 44.68%. All right, let's bring in Bjorn Martens now, CEO Passive Income Token, join us right here. Great to have you, Bjorn. Good morning.
Good morning, Laddie. How are you doing?
I'm doing fine, even though the market is not looking fine. Well, Bjorn, it's a bear market. What are the possible indicators, of a bottom for this Bitcoin price?
To have a real indicator, if you want to see the bottom of Bitcoin, you should look at the percentages what's been done in the last bull runs to the minimum. And then we really see a pullback of 85% to 90% almost. And this will mean that Bitcoin will pull back towards 20K, 18K, maybe even 15K on the worst case scenario. So people are, at the moment, it's been savage basically the market, but we're not there yet at all. Bitcoin is still pretty high. It's only down 55% from its all-time high. So I expect we're going to see much more lower bottom over the few months.
This is quite interesting. Everybody is predicting a bottom around the 20K. Some are saying 8K, some 15K. But we know how this market can be funny. It reverses on you what you didn't even expect. But Bjorn, we're seeing the issue with stable coins at this point. USD still in the news. That's with Terra Luna. And we're seeing people are still buying Luna on exchanges. But this whole thing is making the market even more shaky, isn't it?
Yeah, it definitely made the market very shaky. Terra had its stablecoin backed up by other cryptocurrencies, by Bitcoin, but not just Bitcoin, also Avalanche, for example. And that's why I've seen Avalanche being hit very hard as well during the Terra crash. It became a death spiral, as everybody knew. As soon as the Terra market cap became smaller than the UST market cap, Terra couldn't back up the UST value anymore, and it just became death spiral going down. Going basically to zero, as everybody has seen. They have a revival plan, but their legal team have already quit it. People are not agreeing on it, and honestly, all those early investors that have been holding from the top and bought by on an extra $20, for example, don't even have any value in these Luna tokens if they're going to be relaunched. So I think people should just give up on it, and it's the end of the game.
Right, and I'm sure a lot of traders are not ready to give up on Luna yet, because we're still seeing volume, with what's trading, on exchanges. But Bjorn, we'll keep watching and see how all of that plays out. Thank you so much, Bjorn. Always great to talk to you.
Thank you, Ladi. Have a good day.
All right. Bye-bye. So now let's look at the top alts by market cap. We see it's mostly red on that counter, with Cardano, the biggest downer there, is down about 8.14%, trading at 51 cents. Magic Cardano was trading over $1 just a couple of months ago, but we're seeing new lows for most of these currencies. BNB trading at $298. That's down about 0.49%. All right, that's it for the markets, and that's it on the show today. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.